Hi there guys, welcome back. This is Kishore here, founder and CEO of Trade Achievers. So in this video, what we are going to talk about is about intraday stop loss hunting. So if you are already a follower of our YouTube channel, you would have noticed that we have already made this video in Tamil language, but now so many people have requested us to make this video in English. So I just wanted to help you guys. Now, before getting into the subject, a quick question. If you are already a trader, imagine every time when we take a trade, we place our entry, then we place our targets, and then we try to place our stop loss. Most of the time what happens is the markets, after it has filled your entry, it comes to your stop, hits your stops, and then it goes to your target. So you would have experienced it, right? So most of the time this is what happens. A retail trader gets stopped out and then the market gets to our target. This is what happens. Have you ever imagined why this is happening for a retail trader? See, even in my early stages, what I used to think is, I used to think somebody is watching my trades, some institution or somebody is watching my trades, and whenever I take a trade, they are trying to pull the market down and hit my stops and then get to my targets. This is what I used to imagine. But through experience, I come to know that this is not one-man show. This is all about institutional stop hunting. So now, first thing is we are going to see how institutions are manipulating and hunting the retail traders' stop loss. All right, and one more thing, important thing is most of the time this is happening because a retail trader doesn't know where to place his stops. All right, so let's see. We'll have an imaginary picture here. Let's see how our stops are getting hunted. So from this scenario, what we can say is, let's say this area is where the market is bouncing every time. Now this area, we'll call it as, if you're already a trader, you would have known this. This area is called as a support in the market. Now there is already 3 times the market has taken a support and it started to bounce back. And most of the retail traders, seeing all those YouTube videos and all the information, they tend to think that whenever the market starts to hit a support, it starts to bounce back and they want to enter a trade. All right, that's well and good. Now imagine for the 4th time, the market is coming and hitting your support. Now as a retail trader, we all wanted to buy at the support. Now imagine as a retail trader, you have an information, you have a knowledge that when a market touches the support, it has to bounce back. If as a retail trader, you know that the market is going to go up, what about an institution? Whether they'll be knowing it or not. So definitely an institution or a professional trader would also have an idea the market is going to go from here to an higher price. So even they want to get into those trades. But the problem is, as a retail trader, we are going to trade only few numbers of quantities. Let's say 1 lots, 2 lots, 5 lots or 10 lots. Imagine, let's say we'll take in for an example. If I'm going to take a 1 lot, whether I'll be filled? Yeah, definitely I'll be filled. What about 10? Yeah, it's going to be filled. 100, some slippage will be there, but still I'll be filled. But what about 1000 lots? If I'm going to take 1000 lots of buy over here at the support, whether I'll be filled or not. So what happens is, in order for me to get those 1000 lots, as a buy, I need 1000 lots sellers. If I'm going to be a buyer over here, I need an equal amount of sellers to be there in order for my order to get filled. So what happens is, retail trader wants to buy, institutional trader also, they want to buy. Now how can an institution manipulate and take 1000 lots of buy with retail traders selling it for 1000 lots? So this is what we are going to see. Now let's say the market comes to the support, it has hit the support and then the candle closes, and the next candle, we'll take this candle as an engulfing candle. So as a trader, if you have seen about candlestick patterns, you would have known that engulfing means it is a sign of bullish, trend is going to be bullish. So let's say this is the area, after an engulfing candle has been closed, you wanted to buy at this place. Now what happens is, as a retail trader, you place your buy order and then you place your target over there, and this is the place you will be placing your stop loss, correct? Now entry is there, target is there, and then we have a stop loss. Now think about this. This is your buy order. What's the stop loss going to be? What is the stop loss orders? So all your stop loss orders is going to be sell orders. Every order which you're going to place will be the opposite order for the stop loss. So this is your sell order. Now what happens is this institution wants to get into this trade, but they don't have the much amount of sellers to take 1,000, let's say 1,000 lots of buy. So they need to make retail traders think this market is going to go down, and they want to make the retail traders as a seller. Now how to do this is, what they do is, now from this area with high number of volumes, they try to bring the market down. They try to pull the market. See, one more thing what you have to notice is, an institution can never change the trend of the market, but they can manipulate the market for a certain extent. They cannot change the trend. For example, let's say the market is in a full bullish market, they cannot make it as a bearish market. No, they can't do that. But they can try to manipulate for a certain extent. For example, let's say they want to hit 10 to 20 pips of stop loss. They can do that through volume. Now what happens is, through volume they try to pull this market down. Now what happens is, most of the retail traders would have placed their stop loss over here. Now the institution doesn't know where you have placed your stops. There is a two difference between what I'm going to tell. There is the institution doesn't know where you have placed your stop, but they'll be knowing where you would have placed your stops. See, they don't know where you have placed, but they know where you will be placing it. There is a difference between that. So they know exactly. Most of the retail traders, let's say they'll be putting it for 10 pips, 20 pips, 30 pips or 40 pips. This is what the retail traders are going to place their stops. So what they do is, they try to manipulate and they try to bring the market a little bit down, and what happens is, most of your order gets stopped out. Now all your orders, buy orders, is going to trigger for the sell orders. Now what happens? Okay, let's say, okay, they have hunted my stop loss. What happens? The next procedure is, now once the support is being breached, what happens is, next the retail traders, most of the time all the traders over here are going to be breakout traders. Now what happens is, the new retail trader starts to emerge and they start seeing the support has been broken, and new traders start to come in, and they'll be known as breakout traders. Once the candle closes below this, now people starts to sell the market. So the breakout trader starts to come in and they start to fill sell orders. Now apart from this, after breakout traders, let's say the market has come down and it's trying to go up. Now it has hit the previous support, which now has become a resistance. Now this area is the people are going to be retracement traders. Now what happens is, the retracement trader comes in and he starts to sell the market. Now two types of traders, a breakout trader and a retracement trader, have changed their position from buy order to sell order. Now apart from this, what happens is, imagine all the retail traders who have taken a buy over here and they got stopped out. Now in order to fix up their losses, in order to come out of those losses, they want to go for double sell. Now people start to average, or they take more positions. Rather, let's say they have taken one lot of buy here. Now they want to go for two lots of sell in order to cover the losses and make some more profit. Now all the retail traders who are there in buy orders, now they start to go for sell orders. Now every retail trader has become, let's say, the breakout traders, the retracement trader, and already the swing trader who took a buy over here has taken two lots of sell. Now everybody has become a seller. Now the institution, what they have is, they can have their 1,000 lots of buy, because most of the retail trader, what they have done is, they have, let's say, for an example, let's say they have made 1,000 lots of sell. Now the institution can get filled for 1,000 lots by orders. Now what happens to the market is, the market starts to move and hits your targets. Now this is how the institution manipulates a retail trader. A retail trader who was there in a buy order once the market breaks the support, he thinks the market has broken the support, now it is going to go all the way down. So now the buyer who was the retail trader who was a buyer now has been changed to a seller. Not only that, the people who had one lot will be taking two lots, one for covering their losses and one for making profits out of it. The next thing is the breakout trader starts to come in once the market breaks the support, and they went for sell. And after the sell, once the market reaches the resistance which was previously as a support, now retracement trader thinks this is a good point of entry for sell, and every retail trader who was there in buy has become a seller, and the institution who wanted to get filled for buy orders can now be filled because all the retail trader has become sellers. So this is how an institution hunts a retail trader's stop loss. That is because only your losses can be their profits. So imagine, let's say I make $10,000 as profit. Where does that $10,000 come from? So somebody's losses is my profit. So for an institution to live and make money out of this market, they need retail traders to lose money. So our thing is you have to safeguard your investment. So I think this will be useful. At least now you know that how an institution hunts a retail trader's stop loss. Now this is what we teach our students in Trade Achievers. We teach them where to place our stop loss. Most of the time what happens is people start to place their stops for based upon the capital. Let's say I want to place my stop loss for $100. I want to place my stop loss for $20. Now they are placing the stop loss according to their capital. So the market doesn't respect the capital stop loss. The market respects when you are going to have the stop loss at proper supply and demand zones. So that is what we teach at Trade Achievers. So we teach people where to place your stops, and there are certain extent. For an example, let's say an institution cannot bring the market all the way down because they can't change the trend from bullish to bearish, but they can just manipulate it. Now what we do is we have certain technical tools to identify how much the institutions are going to manipulate the market. Now what we do is we place our stops below that or above that so that our stop loss will be safe. The first thing is in the market, the first thing is to safeguard your capital. The next thing, automatically profit starts to come in. So first at least try to know these are all already happening in the retail traders markets. So institutions are there and they try to hit your stop loss. So try to be careful, and next time when you're going to place your stop loss, try to place it on a proper technical basis. Alright, so I hope this video was useful. So in case if you want to learn all those tips and how to place your stops and how to take an entry, targets, everything, we Trade Achievers, we teach people on how to take trades based upon proper technical facts, not upon assumptions. We take trades upon facts. This is what we teach at Trade Achievers. So if you want to enroll for the classes, the scroll is going there. You can just call to those numbers and you can enroll for the courses. I hope this video was useful. Thank you very much for joining. Take care.